Well, we are continuing on here in number 4 on the patterns story. I left off talking about news influences, and so let's continue with that. The big news right now is that the dollar is collapsing, so they say, and there's a little bit of a dilemma about that because the latest reports here, market news, according to the Forex metal guys, is uh, confidence in the dollar is declining, and it doesn't make sense because the fundamentals are looking very good. The jobless rate is down, new home sales are up, and all that kind of good stuff. Now, the fact is that most of this here doesn't mean squat when it comes to valuations of currencies. And I like this one right down here. The Aussie is doing well because the Reserve Bank of Australia said we're in a new rehabilitation stage, and everything is going to be great. So that's a good reason for the Aussie to be where it's at. But actually, that doesn't have a whole lot to do with anything. The Aussie economy or the Australian economy is very, very minor compared to the U.S. economy and the BRIC group that's actually makes up 40% of the world economy. But uh, point being here that there is actually, though, what you might call two news influences. One's in the short term, and one is the long term reality of what's really going on here. Uh, the infamous non-farm payroll big moves, I believe, happen mostly when there's nothing else going on, and the market has to get excited about something, so they get excited about the job payroll report in the United States. Now, really, it doesn't mean diddly when it comes to currency valuations. What the job deal is doing overall, the strength of the economy is there, but the real what 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 this is all about is establishment of exchange rates between various currencies. Now, what are the primary uh, influences on an exchange rate? One of them is money supply in the relative economies, and two is the general goods valuation. General goods valuation means is a car in the United States worth the same thing as the same car in Europe? Uh, what we're trying to do is establish relative similar values for similar goods, between the currencies. This is a big deal about trade, and U.S.'s problem with China deflating its currency, or basically pegging its currency to the dollar. And right now, what has overshadowed, we're not going to see a lot of these influences that they talk about here that used to move the market rapidly, actually, for a short period. Probably not going to see those things move the market at all anymore because there's a much greater. We finally woke up and found out that there's some much greater influences out there that really determine what these exchange rates should be. Right now, the United States is embarked on a major debt uh, problem. It's embarked on a major recovery effort by the Fed and the Treasury, which is creating a major debt problem. And the Fed is having to print money to pay off this debt because there's so much of it that there's not enough buyers to buy it, and their economy, everybody else's economies are suffering, so that money is drying up to buy them as well. So what's going to happen, and what they actually believe, some people believe they want to happen, is that the dollar devalues. When the dollar devalues, it creates a better market for our goods because our goods become cheaper relative to other goods, and it allows the Fed to pay back debts that were created years before with cheaper dollars. So it actually behooves them to create a cheaper dollar. Now, of course, this is balanced out by the fact that Europe and GP, the United Kingdom group, they're devaluing their currencies by the same process of pouring money into the economies, trying to stabilize everything. In the meantime, we have the people like the NFA that's trying to dampen the fluctuation of the market to try to hold these exchange rates at some value that's going to allow the economy to the global economy to function, because when you get very rapid moves or changes in these rates, it's totally disconcerting to everything that has to do with buying and selling goods, buying bonds across international lines in different currencies. So that is the real driving force behind what these exchange rates are going to be. And right now, it's a kind of a competition as to who's going to get their currencies devalued the furthest. And I kind of think that what we're going to do is we're going to see these cycles continue at say go 3 to 500 pips, and because no one really has the upper hand on this. I don't think that the U.S. has more money than everybody else, so they can should be able to devalue more than everybody else faster, but it's not. It's going to even out in the end to some degree, in my opinion, as well. So that's the story on news. I don't put a lot of faith in it, but it does influence the psychological factors in the market, and it will tend to it will be behind these bigger moves. The true news, the relative news that really affects these exchange rates will be the driving force behind some of these major moves. Now, once again, I'm out of time, so next one we're going to be looking at the short term and what's happening there, and getting ready for the action. Thank you for watching.